Morning, it's Harvey Jackson. I'm just going to get through Sask crop report and drought, the drought monitor and drought in Saskatchewan. As you can see here, the weekly rainfall is kind of deficient in some parts of Saskatchewan here, of course, and it shows up on the cumulative map as well. But all that aside, you are looking at cropland moisture levels, and there is drought in a couple areas down to the southeast and to the northwest. For sure, but you can see some almost normal or adequate moisture conditions in a lot of parts of the Saskatchewan marketplace. When you look at canola crop conditions and spring wheat crop conditions, you can say that the north is maybe the most deprived, so you can see it here, or the northwest, and the southeast or southwest as well. The other part of the areas are in a lot better shape as far as crop conditions go. And then when you look at Durham, similar kind of things. You basically have the Swift Current, Maple Creek areas all in a lot more poorer crop conditions, and then Field P is just in the southwest as well, but covering good conditions going across a good part of Saskatchewan for sure on the field B crop conditions. Canada eyes trade deal pact to reduce U.S. reliance. What I want to maybe point out is that the Canadian exports here to the U.S. dropped in May to 68% of total exports from the monthly average of 75% last year. The U.S. share in May was the lowest on record as companies pushed to diversify from the U.S. And I think that's probably a key point that this guy has made here. But there's a couple of areas that he also addressed as well. And this is what I've been saying for quite a while. The Canadian companies are overexposed to the U.S. as competitive as they used to be due to Trump's tariffs. Now have to find their ways, and I'm going to say canola's in the same boat. We are riding the wave if we are allowed to trade with them, but we're going to have to find other partners. We cannot count on just one partner. Major developments of the trade war. And there's a couple more. I just didn't put them in here the last few days, but it basically started February 1st, and you can see he's in the news all the damn time. He just cannot keep his mouth shut, and wanting to just keep stirring the pot. And I don't know if it's actually going to be good for him, but I think there's going to be some good things, and there's going to be some bad things there too. But it's definitely not good for the normal trade patterns, that's for sure. So if we look at the drought monitor, there you can see there's a west versus east. There's some just south of the Great Lakes, of course, in the I states, and the rest does not appear to be in drought. You look at the just percent in drought. There's only 9% in drought for corn and 7% in soybeans. Like, it keeps getting better. There's many analysts out there talking bigger numbers for yields, and there's this is telling us that's very likely, and yet there's still lots of challenges between now and finishing. There's actually crops that are growing too fast even, so, and that causes other issues as well, like the tassel not coming out, so corn is not pollinating properly, that kind of stuff. So here you have just the weather progression in Western Canada. You can see that there's some holes here throughout, and the same thing on the European model, and it's a little smoother, but it's actually maybe putting a little bit more rain in this area as well. Not that it's going to be in time or not, but any soybeans at this stage will be well benefited with rain, that's for sure. Quick look at the markets. Canola up again. We're above that $716 for January, $705 for November. Soybean oil, it's had a good run. It's actually broke out, and a lot of the wheats are up as well. So let's just have a look at it. You see the good market. Lots of green the last couple of days, bouncing off of that support line. And you could say that you're basically in this channel. We need to break out of this channel for us to make higher highs for sure. European rapeseed bounced off the bottom. Here we're comparing soybean oil, which is the black, and canola, and you can see that they are married together. And the soybean oil and canola oil are definitely following the same kind of trend. Soybean futures basically caught in this channel yet. Needed to break out of there to get a little bit higher, and you'll see some short covering happening. I think it's already happening as the markets are trying to push us down, but you get a breakout of this even on the soybean oil, the canola, you name it. They're not going to be continuing to push this market short. They're going to have to go long. Soybean meal futures did the exact same thing. It was that short-term moving average actually traded at it and then went to the next average trading contract there too. Crude palm oil, this is a 200-day moving average, and it's trading right at it and trying to trade above it. That's a good signal for some more bullish signals for sure. Crude oil really doing nothing. The Canadian dollar is actually drifting off. Would like to see it actually recover just to get some of those positions covered, or balancing the accounts on the brokerage side. U.S. dollar index going up, and a lot of this is just because of Powell and Trump. So have a look at the wheat here. We're nice, just a little bit of a candle here, but we're on that 78.6 retracement value, and that's a very important area to hold. Otherwise, we're going back to 100% down. Kansas recovery. Chicago has a good recovery there as well. And here's your corn futures, and it's traded through a couple of the short-term trading averages. And that's all I have here.